It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, November 5th, 2015. Cruising our way through. Last newsletter of this first week of the month of November. Remember, we do not do the newsletter on Friday. Next one will be next Monday. We have a huge opportunity tomorrow. Tomorrow is Non-Farm Friday. So our plan is going to be to trade around the news tomorrow and then look for sustained direction afterwards. We have a very simple and very important plan for tomorrow's non-farm payroll report. Stay tuned for that. Crude oil is bearish this evening with an overshoot of the channel lows, so our plan is to wait for the bullish correction and sell the buyer failures right back down tomorrow. How about the E-mini S&P? Yep, trading into termination of a wedge this evening. S&P is wedging this evening, and we're right at the tip of that wedge, which means aggressive traders will look to fade the highs and lows, while conservative traders will trade the pullback in the direction of the breakout. We get a plan for the E-mini tomorrow for you guys and gals. Going to be a bit of a tough one on the S&P. We'll take a look at that tomorrow. Gold continues to tumble lower this evening, which means we'll continue to look for opportunities to sell those bullish corrections off those lows. It's been working the past week, ever since FOMC a few weeks ago, and we'll continue the same plan for gold tomorrow. We get a plan for gold. And of course, the euro futures contract, the 6E, is range bound and slightly bullish heading into tomorrow's big news report, which means we'll be looking for opportunities to buy support levels below using seller failure patterns on the euro futures contract. As you guys can see, we got plans for Non-Farm Friday, crude oil, gold, euro, and of course, we can't forget about the E-mini S&P. Before we jump into today's charts and before we talk about the strategy for tomorrow, I do want to remind you guys to make sure you're watching this video on our trading blog at Sideways Markets. If you're watching the video on our YouTube channel, make sure you check the link in the description of the video. It'll take you over here to our trading blog. A few reasons why you might find interest over here at Sideways Markets. Upper left-hand corner, if you're not a member here at School of Trade and you'd like to get a free pass to come out and test drive our live trade room, grab that free pass in the upper left-hand corner. If you would like to register for our nightly newsletter mailing list, all I need is your name, your email, yes, a real email, and then make sure you check your inbox, and I'll send you a verification email on that. That way you'll always get an email from me every evening when the newsletter is live. Right below the video tonight, you'll see a spot to download all the charts you'll see in tonight's video. That's right, all the charts in tonight's video. You'll see those available for download right below the video here tonight. And of course, over on the right-hand side, you can learn more about trial membership, our beginner, intermediate, or advanced levels of membership. You can read real member reviews, and of course, you can also speak to somebody 24/7, 365. No question too big or too small, guys. Use that support button if and when you need help along the way. Guys and gals, we've had a great week so far. Hope you guys have enjoyed the newsletter. Hope you made some money along with us this week. Let's finish up the week here with a bang. Tomorrow is Non-Farm Friday. Tomorrow morning, we have one of the two big news events. Non-Farm Friday, the first Friday of every month. And of course, we have FOMC, which we saw just about 10 days ago. 8 times a year, we hear from the Federal Open Market Committee. So tomorrow morning, first Friday of every 1 month, first Friday of November is tomorrow. So tomorrow we're going to hear the employment situation. This is a big deal. This news report tomorrow is a big deal. And therefore, everything that we talk about tonight must be taken and really looked at through the lens of anything can happen tomorrow with non-farm payroll report coming out tomorrow. The most important thing I want you to remember about tomorrow's non-farms is to trade around it. That's the most important thing. We have no business trying to trade the news. I don't care what news event it is, big or small, I'm always going to be trading around the news. Now, one more thing. After the news comes out tomorrow, sometimes, it's not typical, but on FOMC day, non-farm payrolls, some of these big news events, sometimes these markets go on a tear, okay? A few weeks ago, we saw the S&P go on an absolute tear, right, blowing right through everything. So I need you to remember that these big news events can lead to dramatic low volatility or high volatility, low volume environments, and you need to be very careful when that happens tomorrow. It is somewhat rare. We are going to see some decent volatility because of this news tomorrow. But what you need to be very careful about tomorrow is that environment like we saw during the FOMC announcement, 2 Thursdays ago, right? Got to be careful because sometimes the market just completely tears through every resistance area, every support area. So I need you to put a little bit of thinking behind this tomorrow. If the market is running, do not trade against that move. Okay, we saw it last FOMC. Things got really crazy. You have to understand that. Okay, so I'm always a little bit tempted during these, for these newsletters to just kind of skip these newsletters because remember, everything we're talking about today goes through one caveat, and that is if the the non-farm payroll report tomorrow morning, if this market starts to rip everyone's face off, right, in one direction, we have to recognize that and we have to go with that direction. Okay, so for example, right now, we have a bearish crude market. I'm going to be looking initially for a buyer failure to sell this thing back down. But after a few moments of watching the reaction to the news tomorrow, we are going to know, for example, if this thing just takes off to the upside here, blows right through everything, yeah, heads up, not going to want to sell that, right? So use a little bit of intelligence tomorrow. And if you don't know how to spot this stuff, that should tell you right off the bat, probably don't want to be trading tomorrow, all right? This is the stuff that kills new traders' accounts, stepping into these big dramatic moves that happen after non-farms. So tomorrow, the rule of thumb is, if you don't know how to spot a runaway market, be very, very careful tomorrow, okay? Be very, very careful tomorrow because of those dramatic reactions we get to that news. Also, I'm going to trade around the news tomorrow, wait for the reaction, and then we're going to play the reaction, all right? So use that bean of yours tomorrow. Don't go gambling. And remember, make sure you be careful if there's a runaway market in one direction or the other. Do not try to trade against that direction, right? It will take your money and make you wish you would have listened to me, all righty? Hope you guys are prepared for that. Now, let's jump into crude oil. Crude is bearish this evening with an overshoot of the channel lows, so our plan is to sell short after a bullish correction and buyer failure after the news is released tomorrow. Again, I'm not trading the news. I'm going to wait for the reaction to the news, and I'm looking for, again, I'm expecting to see in this bearish environment right now where we have our bear channel, we have some very symmetrical legs on the way down. And so, like we always say, in a bearish trending environment, I'm looking to sell resistance. I'm looking to sell at a higher or at a premium price. And as we go higher, there will be three ways to sell. As we go higher, I'm looking for a reversal pattern. That'll be the first opportunity. The second opportunity will be a buyer failure. We saw that perfect today earlier. Buyer failures, right? Every time price goes up. We saw it today on the S&P. Easy on the S&P today. So the third way to do it, right? So first one will be trade the reversal pattern. That'll be the earliest. The second will be wait for the buyers to try and fail, right? Buyer failure. What's the third one? The third one is you could wait patiently, wait for the buyers to fail, and then once you see that proof, then sell those wave patterns to the downside, right? Sell those rips, sell those retracements on the way back down. Now, if you're a buyer right now, we have what we call a reversal line right here at 45.57. This will be a nice, easy area to look for some bear traps. What I mean by that is with that channel overshoot and the measured moves down, we're expecting to see a measured correction back up so we can sell it back down. And again, I'm not going to blindly just sell it. I'm going to wait for what? reversal patterns, buyer failure patterns, or wait for it to tumble and I'll sell the rips back down, right? Stay impatient for it. So we anticipate some sellers who may or may not be brand new to this game. They may try to sell that 45, 57, and that's an easy area to look for seller failure on the way up to that measured correction. Just make sure, though, you're aware if you're going to be a buyer right now, treat it as a scalp because you're going against the trend and buy into those stop losses of those sellers. So tomorrow on Crude, looking for selling opportunities after a bullish correction using reversal patterns, buyer failure patterns, or continuation patterns after we see the move and push back down. Now you've got the plan for Crude. Let's keep moving over here to the S&P. Now the S&P is a very interesting scenario for us tomorrow, right? If you remember, we have the last few days going higher, 1-2 pushes higher, profit taking on the way down. This was that beautiful buyer failure that we talked about in last night's newsletter. Remember this from last night's newsletter? Bear channel down, wait for the buyers to try and fail. I mean, it does not get much easier than that, guys. That was a beautiful opportunity that we highlighted in last night's newsletter. Now we have what's probably going to be the most challenging market out of all four of these tonight. The E-mini S&P is trading into the termination of a price wedge, right? So what I mean by that is we see a price wedge on the chart, and we are all the way at the end of that wedge, right? We're all the way at the termination point of that wedge, okay? So here's the scenario you want to look for. The aggressive traders can go looking for fading opportunities, right, to fade that thing right back down. But the problem is that you want to fade a wedge breakout earlier in the wedge. Think about this price wedge as one of those Jack in the Box, right? No, not the drive-through fast food place. It shouldn't be called food anyways. Right? But bam! And all of a sudden, at the end of this wedge, it explodes, right? So the way that you want to trade this wedge, and again, put it in context, we have a bullish environment down into that wedge. So scenario one, we don't buy the breakout. We don't buy the pullback. We wait to see proof after the pullback, and we trade in the direction of the pullback. Okay? Now, it will go for both sides, right? Break down, pull back, wait for proof, right? Make sure you get some proof that these sellers are really on board here or the buyers are really on board here. Okay? Again, it's always a bit of a challenge at the edge of these wedges, right? Because you want to see the breakout, wait for the pullback, and then stay patient. Because you're going to see on the chart here, you get a lot of room for some nice big juicy targets. So it doesn't make much sense to be the first one in on that pullback, right? Wait patiently. Again, don't buy or sell the pullback. Simply wait for proof after the pullback and then trade in the direction of that pullback, right? If we would have got to the wedge a little bit earlier, then we'd be talking about fading that price wedge. So we see we have the most narrow wedge here. What really makes this to be a little bit of a difficult scenario is this larger wedge, right? This larger wedge. So we're going to have to play this closely, right? We'll play this by ear tomorrow, kind of seeing how this breakout looks. If we get a significant breakout to the upside, we'll expect to pull back in, and then we'll look to follow that direction. Significant break to the downside, right? Wait for it to pull back in, and then we're going to look for proof in that direction. Obviously now we take our wedge extremes, copy and paste it up for a wedge expansion target, copy and paste it down for a wedge expansion target, and sure enough, very convenient here, all the way down at Monday's low, down around that 64.25. So we could definitely see a very volatile push lower here to reclaim those lows that we had just at the beginning of this week. If we do go higher, though, we have a definite run back to all-time highs here that is certainly setting up right now. In fact, they got potential here to overshoot those all-time highs. 21, 15, 24, what is the all-time right now? 14 something, 14 and 3/4, right? So we definitely can see that both directions here have definite interest here. We may not get it all tomorrow, but we definitely know that's the scenario right now. We're at that kind of termination point of that price wedge. So again, break out, pull back, and go. Break out, pull back, and go. The aggressive traders can fade the breakouts, but with non-farm payrolls tomorrow, it's going to be a lot more conservative, a little bit wiser, right? A little bit wiser in that sense to wait for that pullback back in and then go in the direction of that pullback for tomorrow. This will definitely be the most challenging environment tomorrow out of all four of these markets. It will be on the S&P 500 just because we have that multiple wedge and that termination of that current wedge right now. Again, stay patient on the S&P tomorrow. Tomorrow should be very interesting to see what happens after, again, maybe after 9:15, we'll know what direction we're going in, and then we'll be able to trade in that direction tomorrow morning. How about the gold here? The yellow metal continues to tumble lower this evening. I know, right? I mean, these buyers literally are going, uncle, right? I mean, it's they haven't even been able to get off the mat. The bulls have been completely pinned down for a week. It's been since FOMC, right? Almost a little more than a week ago. So gold continues to tumble lower this evening, which means we will continue to look for opportunities to sell after bullish corrections up off this low. I mean, I feel like I'm cheating right now. It's been the same plan for a week. Every time it goes up, wait for buyers to fail and sell it back down, right? It doesn't get much easier than that. I don't want to overthink this. I definitely don't want to start thinking about, well, it can't keep going lower forever. Really? Open up a daily chart of the S&P and you tell me if things can't keep going up forever. It may not go up forever, but it can definitely keep going up or down longer than my broker allows me to stay in that position. I'll tell you that much, right? As we always say, right? The old saying is these markets can stay irrational longer than we can stay solvent, right? I mean, these markets, as irrational as they seem sometimes, this is not a video game. There's a reason why this stuff is happening, and I do not want to try to outthink these sellers right now, right? So we're looking for bullish corrections up, and then again, buyer failure. This is very similar here. We talked about on crude oil. We have a push down. I'm expecting to see, again, very symmetrical moves lower, right? So you can definitely see here we got 1100 right within our sights here, another big round number. And of course, so we're expecting, possibly a little bit move lower here to get to the low of that channel. Right? Bear channel, measured moves, channel rotation, all in a day's work here in a trending market. You're thinking channel rotation, back down to those lows, measured move, down to those lows, and then we're thinking measured correction. Right? The measured correction now, we're going to look for reversal patterns. We're going to look for buyer failures. We're going to look for wait for the reversal and then sell those rips, right? Remember those three different ways you can sell it? All three of those scenarios, though, depend on staying patient here right now. Wait for it to go all the way up. Don't take the bait, right? You don't want to trade against that trend. Well, not if you like the money in your account. If you like the money in your account, right, wait for those counter trend traders to fail. That short-term range that we see there will play into this tomorrow most likely. That'll be a great area as we go back up into that range here, right? Buyers come in, try to trap them, right, and we'll sell it back down. So again, buyer failures, we're expecting to see a measured correction back higher, and then we'll be fading all these moves back higher. Pretty much the exact same plan we've had over the past week and a half here on gold. Rinse and repeat there on gold. Rinse and repeat. All right, let's keep going. Euro is range bound and slightly, just a little bullish heading into tomorrow's big news event, which means we'll be looking for opportunities to buy support levels below us using seller failure patterns. Now, today's low of day at 0.0839 would be an ideal place to buy after a bear trap at these lows. And yesterday's high at 0.974 all the way up, right? So these two areas right here, we've got 0.839, that's today's low. I can easily see this coming down, fake breaking that low. Remember, we're talking about non-farm Friday tomorrow. Anything goes, right? We know we're bullish here right now, so we're looking for a seller failure, and right back up we go. Where might we go? I know right now we have an untested previous high of day. This is just yesterday's high, right? Pretty incredible up there. That was the most pathetic circle I've ever seen. Up there at 0.0974, right? So some definite areas of interest here. 0.839, 0.974, right? Those will be some definite interest here. I should have marked up this area as well. That will also be an interesting area overhead, right? Up there at the 0.941, right? Another spot there to keep in mind on. All righty? So we're bullish right now. Our plan is to look for bear traps at the lows, bear traps after the correction. Pretty much the same plan, except the opposite direction here. Looking for a measured push lower into a bear failure, buy that failure, right? As if the price goes higher, waiting for measured corrections into seller failure to keep buying, right? So as the price goes higher, we're buying pullbacks with measured corrections. As the price goes lower, we're buying into the stop losses of the sellers using counter trend traps, right? Using bear traps as the price comes off those lows. All right, guys? Tomorrow, non-farm Friday. Be patient out there. Be patient out there. We get a plan for the euro, looking for seller failure after the pullback lower. On the gold, pretty much the exact opposite, right? Looking for buyer failure after the correction up off that low. On the S&P, don't forget, we got that wedge, right? So wait for proof after the breakout, the pullback, and then trade with that move tomorrow. You got some easy targets waiting for you above and below tomorrow. This is going to be the one you want to really stay patient for tomorrow. I have no problem being the last one in tomorrow on the S&P 500 because you know it's going to be a little bit challenging tomorrow. And then again, on the crude oil right now, this is a really good example where we have an overshoot of that channel low. And again, combine that with, so clearly the sellers took a little bit of a big chunk out of this thing today. We're expecting to see an overshoot back at the high. We're expecting to see it snap back up, right? And then we'll look for those buyers, try to buy that next pullback, and we'll look for it to fail to sell it right back down in. Remember, tomorrow's non-farm Friday, so if any of these markets go on an absolute tear, do not go against that move. Look for traps in the opposite direction and trade right along with that move tomorrow. As always, you don't need to do this alone, boys and girls. Come out and join us tomorrow morning in our live trade room. It opens up at 8 a.m. Eastern Standard Time tomorrow, and we'll be doing all this together in real time. That way you can do it the safe way, the correct way, right along with us. Before I let you guys go, don't forget, we have the best free trial in the business here at schooloftrade.com. Head over to our website at schooloftrade.com, register for your trial membership. You're going to learn more with me in 1 week on that trial than anywhere else on the interwebs. I can guarantee you that. Stop wasting your time on StockTwits and come out and get a professional grade education, right? Also, you can learn more about our beginner, intermediate, and advanced levels of membership And we always have someone standing by 24/7, 365 to give you guys a hand. No question too big or too small for us here, guys, on our live support on our website. Thank you so much for being a part of the newsletter this week. We have had an incredible week in our trade room, an incredible week of volatility on our newsletter, and great profitable trading opportunities. I hope you guys learned something. I hope you earned something this week. Don't forget, this is the last newsletter of the week. The next time I see you on the newsletter will be next Monday evening. Also, don't forget, next week we have a holiday on Wednesday. Next Wednesday is Veterans Day, so we won't be working on Veterans Day. Make sure you find a veteran and tell them thank you next Wednesday. We'll talk about that next week, though. All right, guys, tomorrow morning we open up at 8 a.m. Eastern Time. And, of course, next newsletter will be next Monday evening at 8 p.m. Eastern Time. My name is Joseph. Don't forget to send me some feedback. jj@schooloftrade.com is my email address. Give me a thumbs up on the YouTube video. Always love it when you share this information with a friend. And I will see you guys as advanced members tomorrow morning in our live trade room, opening up at 8 a.m. Eastern Time. I'm out of here. If I don't see you tomorrow morning, have a great weekend. And I'll see you on Monday. Adios, amigos. Bye-bye for now.